If you haven't invested in Bitcoin yet, don't worry, it's not too late. Do you want to know why? If you want to know the answer, make sure to watch the video until the end so that you won't miss any important points. Hello future billionaires, welcome to Stock Investing 101, the channel where you get stock inspiration, motivation and knowledge to become the next future billionaire. In today's video, we will be discussing Cathie Wood, Bitcoin to $500,000. Without any further ado, let's dive in. Bitcoin is a decentralized digital currency without a national bank or single head that can be sent from client to client on the shared Bitcoin network without intermediaries requirement. Transactions are checked by network hubs through cryptography and recorded in a public conveyed ledger called a blockchain. Bitcoins are made as a reward for a process known as mining. They can be traded for different monetary standards, items, and services. Research created by the University of Cambridge assessed that in 2017, 2.9 to 5.8 million unique clients utilized a cryptographic money wallet, most of them using Bitcoin. Bitcoin serves as a digital version of gold, but Bitcoin is much more than gold. Unlike gold, you don't have to physically store Bitcoin safely or carry it around like money to purchase materials. The cost of Bitcoin has been on a tear, rising almost 160% this year and about 25% month to date. That may be only the start, ARK Investment Management CEO Cathie Wood said. Bitcoin's new ascent to $18,640 may give investors flashbacks to 2017, when the digital currency arrived at a high of $19,783.21 in December before selling off. This time is different for one integral explanation, and Wood said institutional investors' contribution, which she said could drive Bitcoin's cost to $500,000. The author of ARK and a prominent supporter of problematic innovations, for example Bitcoin and Tesla, told participants of Barron's Virtual Investing in Tech series that Bitcoin is the most perceived money of the crypto asset ecosystem. It's the same as the dollar in the fiat money framework, she said. That's a pretty exalted role. Wood added that the rise of central bank digital currencies, or CBDCs, has added legitimacy to Bitcoin, referencing China's ambitions to launch a digital yuan. A few investors, she said, consider Bitcoin to be a digital alternative in contrast to gold or an insurance policy against inflation. With the Federal Reserve's choice to keep interest rates low for years to come, that is one explanation Bitcoin's cost could be rising. Wood said if institutional investors like hedge funds were to take a more substantial premium in Bitcoin, it could send prices considerably higher. Additionally, Wood noticed the inventory of Bitcoin units finished out at 21 million. There are about 18.5 million at present, she said. Wood said institutions have been knocking up their openness to the cryptocurrency as of late, attracting a correlation with the early days of institutions moving into real estate and emerging markets, when assignments began little and then developed. They began with a large portion of a percent distribution, at that point 1%, and afterwards 5% or something like that appeared to be the correct number. If all institutions gave Bitcoin a similar allocation to an average number, the cryptocurrency could rise somewhere in the range of $400,000 to $500,000, Wood said. Bitcoin gained legitimacy in 2020. All through its brief, however exciting existence, Bitcoin has had its detractors. For each fan anticipating takeoff qualities or a move in the basic idea of cash, there has consistently been a critic recommending that Bitcoin is essentially useless or that we can't trust blockchain innovation. Generally, the expansiveness of the range among proponents and detractors has consistently been justifiable because that Bitcoin is still new and it has always been unstable. This year has painted an alternative picture, however. Out of nowhere, Bitcoin is starting to look more legitimate than any time in recent memory. There is also a feeling of growing legitimacy connected to Bitcoin's sudden stabilization. As noted, Bitcoin is generally unstable, and this is somewhat liable for the energized sentiments and viewpoints it rouses. Since the halvening occasion in late May, however, Bitcoin developments have been almost minute. There were no sharp gains or misfortunes over the time of June, and in that equivalent range, the cost was kept on the whole above $9,000. As of late, Bitcoin has really spiked upward once more, making for its most sensational development since early May. Yet that is not actually something terrible, and the critical takeaway from the mid-year has been a decrease in unpredictability. This is consoling for a ton of traders and analysts. Past the positive and stable response to events this previous spring, Bitcoin might be getting a further boost in legitimacy because of governments and monetary foundations expanding readiness to explore digital payments. The more significant part of these legislatures and establishments are not expressly working with Bitcoin. Notwithstanding, when individuals find out about significant banks receiving blockchain exchanges or the People's Bank of China dispatching a digital currency, it supports that Bitcoin works and that digital currency is what's to come. Even if these changes are ultimately producing competitors, they're assisting with approving its central idea. In closing, we'll note that there are still a lot of negatives individuals will credit to digital currency. Bitcoin's upsides and downsides are generally heated now. Some will consistently excuse it since it's costly or complicated, or because an alternative is more appealing. However, the possibility that Bitcoin is useless or illegitimate may, at last, be blurring because of what we've seen for the current year. CBDC, also known as central bank digital currency, are cryptocurrencies regulated by the country. The recent and eventual rise in CBDCs will help citizens get more knowledge about cryptocurrencies. Cathie believes that the increase in CBDCs will allow people to learn more about cryptocurrencies and Bitcoin. Are institutions behind the increasing interest in Bitcoin? Cathie Wood believes that the answer to this question is yes. The last quarter of 2020 has been truly useful for digital currencies owing to institutional interest. The rapid development of Grayscale's cryptocurrency funds is an ideal representation of institutional interest in digital currencies. On January 12th, the digit asset manager, Grayscale, declared digital assets under their administration had reached $24.5 billion. Grayscale keeps on hoarding Bitcoin and other cryptographic forms of money to fulfill client needs. Also, for its new CEO, Michael Sonnenschein, the explanation behind this fast advancement isn't far from being found. They currently hold almost 3% of all Bitcoin available for use. The first of the cryptographic forms of money stays the most coveted asset to date by institutions. Therefore, the Grayscale Bitcoin Trust, which permits investors to acquire openness to Bitcoin, has now reached $20.6 billion. And afterwards follows Ethereum, the Grayscale Ethereum Trust, hence posts $3.1 billion. This tendency of institutional investors to invest in cryptographic money mostly clarifies the blast in digital assets market capitalization in recent months. Driven by the steady ascent of Bitcoin, the general crypto market cap has reached $1 trillion on January 6th. An examination by Fidelity Investments last June previously underlined the developing presence of financial investors in this sector. According to the study, almost 36% of these investors are in the US. Furthermore, Europe has pronounced to hold digital currencies or their subsidiaries. A portion of the foundations that reported their interest in crypto and stood out as truly newsworthy are MicroStrategy Incorporated, Square Incorporated, and Mass Mutual. As the participation of institutions in Bitcoin rises in increments, so will the value of asset class, and in this manner making it a significantly more appealing investment for both institutional and retail investors in the US and Europe, as well as in numerous different nations from across the world. Is Bitcoin worth investing in? Toward the beginning of 2020, Bitcoin investors started the year feeling bullish. The bear market was finished, and Bitcoiners were looking to Bitcoin's third splitting in May to give the catalyst to another bull run. Nonetheless, the COVID-19 pandemic was a dark swan occasion that poured cold water on bull market hopes. In March, the Bitcoin value streak slammed down to only under US $4,000, a drop of over half, as the truth of the pandemic set in. Regardless of the substantial misfortunes of March 2020 and the clamorous COVID reaction by governments, worldwide business sectors have since recuperated outstandingly well. With COVID immunizations revealed, the S&P 500 has switched all its 2020 misfortunes and proceeds with its multi-year bull run as an overabundance of simple credit and quick cash finds a home in the value markets. While gold went about as a place of refuge resource at the stature of the early COVID caution, it has since tumbled from its August 2020 peak of $2,070, and much to the chagrin of Goldbug and notorious Bitcoin skeptic Peter Schiff, is now around $1,800 an ounce and drifting lower. Conclusively, how did Bitcoin do? Once again, it outflanked any remaining assets in 2020 and indeed on almost any time frame during the last 10 years. As 2021 begins, it continues to do so. If you'd like to stay up to date with the best and latest content about stocks and entrepreneurship, then make sure to subscribe to our channel and leave a like on this video. Did you find this video valuable, or do you want to add anything? Make sure to let us know in the comment section down below. We are posting a new video every day with the most undervalued stocks in the market right now.